Stocks are equity, and this means you own the company. They're a type of asset just like cash, and it's an asset that is much more valuable than cash in terms of value. So stocks are really easy to buy on your local stock exchange, and the financial industry really likes to make it seem very difficult, or that you're not smart enough, or that you don't know enough to invest in the stock market. But I think every single person, especially every single American, can invest in the stock market. So for the US, you need a social security number, proof of residence, and you have to disclose your income. So it's really similar to opening a bank account. Now, why would we want to invest in stocks? Well, okay, the first reason, when we buy stock, we invest in our country's companies. So we're investing in our country, and that is beneficial to everyone inside the country. And second, stocks, if you pick a good one, and I'm going to talk about that, can appreciate over time compared to cash depreciates. So how do we pick the right stock? Well, it's not so much picking the right stock or picking a winner stock. It's about picking just a good company. And I'm going to tell you what a good company is to me. So the first thing I look at is low debt. And with low debt, the company does not have to pay back portions of their net income, and they also have higher net income because they don't have interest payments. Second thing is large cap and mega cap companies. These are companies with a market cap over 10 billion, and we invest in these because they have a lower chance of going bankrupt really quick. They have invested in infrastructure, and they already have proven revenue, and the larger companies have better chance to be around in the future. Return on equity is a value, it's a ratio, and I look at return on equity above 15%. So return on equity means how much the company earns in comparison to how much the stockholders have invested in the company. So with an ROE of 15% per year, it would take 6.5 years to have all stockholder equity returned through net income. And it's just a measure to show the value of the company in the terms of income, because the more net income a company has, the more valuable its stock. Now, with net income, you want to look at revenue growth, because revenue growth, it grows assets in the company, and this could be cash, and it will in turn grow net income. So if net income grows, ROE grows, and this is why I look at companies with a revenue growth above 5% per year. Next, we have to understand the company. So learn how a company gets its money, learn how much it has to pay to run the company, and how much the money left over is invested into the rest of the shareholders and the rest of the company itself. And you don't have to invest in a single company. And if you still like the company, then you can look for an ETF. So an ETF is really simple. It's a basket of companies that you have claim to. So you buy an ETF, you buy all the companies in the ETF. And the last point when picking a good company is just don't invest in what you don't know about. So don't invest in data analytics if you don't know anything about it. You can invest in Coca-Cola because they buy and sell Coke. And you can invest in Walmart because they're a supermarket. So you don't want to invest in something you don't know, because if you find a different opinion that you aren't confident in your own opinion and in yourself, well then this could make you do things that you wouldn't normally do, and this could adversely affect your portfolio. And why are we going to do stocks instead of a savings account? So cash in a savings account depreciates over time. Sometimes a bank will give you 0.0 or 0.05 interest or 0.5 interest gain, but that doesn't beat inflation. And that's the thing you need to do with your cash. Beat inflation, make it more valuable so it's the same value in the future. And the ways to make your cash appreciate, which is grow in value, can be through the stock market. And it can also be in other ways like purchasing land. And this is what investing is. So don't get scared at investing, because it is simple as long as you focus on one thing at a time. Having savings in the first place is a difficult step to take, but once you have taken that step, well, you need to choose where to save. Become an expert in that investing area and start investing. Keep in mind that cash is a depreciating asset. Stocks can be an appreciating one, and it's not difficult to invest in the stock market. You can do it. And the first step to doing this is opening a brokerage. So that was the video. If you liked it, hit the like button, and also make sure you tap that notification bell to get every single notification. This Sunday I'm doing a video analyzing a company, so make sure you comment down below with a company that I should analyze.